Hey everybody, this is David Littlejohn, and following up the day after Washington, D.C. cried wolf. I've had a lot of folks asking me about what do we think the market is going to do since we didn't really change anything within D.C. We shut things down, but ultimately opened them back up. The money continues to be spent that's exceeding tax revenue, deficit spending obviously. And so folks are saying, well, this market, what's underpinning it? Should it be going up? And the best answer that I can offer right now is what I've said before: you don't fight the tape. Okay, and by that, what I mean is the trend that is in place is likely to continue. We haven't had any material changes right now. So let me just talk about what's going on. And I'm going to draw your attention to this graph. Now, I know a lot of you, this looks really busy, but the basics are all these little lines here. This is the top, how the range that the market trades in. So we're looking at the S&P over time. So this is back in May, June, July. Out here is present day in October. And so you can see the market kind of went up and back down and back up and down. And the rest of this is some tools that I use to try to get a feel for how much range and how quickly is the market changing. But the big picture trend is these two white lines right here. Okay? That is a trend channel that extends back for over a year now. It goes back to really November of 2012. And we've got a couple of other lines drawing on here, but the important ones I want to talk about, one of them is right here. There's sort of a green line that is going through right here, and then down here we've got this line below going on up. And what these have been is sort of a support and resistance lines, and what you're seeing is a bit of a wedge pattern forming. And this wedge pattern is coming in right here, and then we have a bigger picture coming off up here. And so that's where we're coming up with these two different targets. You connect the two peaks here, and that comes up to the top. Connect the peak to the lower version, and that's down here, and that's sort of the pennant patterns, we like to say. Now markets, what we look for is our resolutions. They're going to move up from that pattern or down. And what's likely to happen, you can see this line is the end of the year. Somewhere in February, we're going to have to re-debate raising the debt ceiling again. Between now and then, we know that the Fed is likely to continue with quantitative easing. We saw that Janet Yellen has been tapped and is likely to succeed Chairman Ben Bernanke. She is widely considered a dove, so we're looking at continued easy monetary supply. So as a result, nothing's changed. Okay, if that's the case, then I'm looking for us to move back into this channel and to continue to resolve toward this point. This has been about the 1758 is that yellow line here for a long time. We'll probably shoot past it and come up to somewhere just above 1800, and right about the time we get into this discussion of what are we going to do, the market's going to have to start penalizing again, and it's going to move back down toward this same support range. But it looks like we're going to move up toward here before falling off. It doesn't, we don't have to make a lot of sense of this. This isn't based on fundamental analysis per se, other than this is sort of where earnings were projected. It's based on the fact that because nothing has changed in the macro theme, the market is likely to sort of resume course. And we can see here, we thought, hey, maybe we were going to break out. Once we got the news, the market figured out, it sniffed out that Washington was in fact crying wolf. And it quickly recovered and moved back up into this trend channel. So we've seen it drift sideways here, but it's managed to stay within. And so we're looking at, the fear was a breakdown here. Washington kicks the can down the road, so we can take this and move it out to here and look at it all over again up here. But for the time being, it looks like we're going to be looking at earnings, holiday season, how much are people spending. There'll be lots of guessing, but for the most part, volatility with what I anticipate being a continuation of course. We'll keep honoring it, and I will update as appropriate. But for the time being, I would say there's no reason to panic yet. The market's still enjoying the euphoria of the belief that everything has been okay. It's just deferred. Okay, but a deferral means just take that trend and shift it out. So that's what we're talking about right now. Anyway, hopefully this is helpful. I would remind you all, keep calm. Washington may be crazy, but you are not. So with that, I'll say as I always do, you've been schooled. This is David Littlejohn. Talk to you later.